Hello, guys. It's been a while. You're welcome to today's analysis and then market review. My name is Adigun Samuel, your analyst. Like I said, it's been a while. One thing that as Elliott wave analyst or Elliottian, what you would observe is that you don't analyze the market every day. Please mark my word. As an Elliottian or Elliott wave enthusiast, what you need to do once you already have your analysis done and the market has confirmed your bias or your analysis, what you need to keep doing as an Elliottian is to keep adding positions or trailing your stops based on Elliott wave count. Like I said, once the market has confirmed that your analysis is correct, what you need to do as an Elliottian is to just keep following the market by adding positions or trailing your stop based on Fibonacci number. So what I mean is this. Let me go to the chart. The last time I said that we should expect bullish move on gold. I believe if anyone is in doubt, you can check my YouTube videos that I did earlier. You will acknowledge and you will agree with me that I did the analysis when we were at 1815. I said we should expect bullish move on gold. And that is exactly what we had. So that was why I didn't see any need to upload any video once the market has confirmed my bias and then it has given me the roadmap. So all I needed to do was just to keep adding to this position. So the same thing goes for any Elliottian or any Elliott wave analyst or student. Once the market has confirmed your bias, that has given you the roadmap already. So all you need to do is to keep adding position or keep trailing your stop based on Fibonacci numbers or your measurements, Fibonacci retracements or Fibonacci, degrees that you know. So you can just keep trailing. So that is exactly what we had. I said that the correction has ended here and we should begin the impulsive move to the upside. And we have, since that time, we have caught more than 1,000 pips. I uploaded it. This is 1,030 pips already in our favor. And this is also in line with what I posted on my trading view. Look at this. Okay, this is for gold. Let's go back to our gold analysis. I posted this trade on the 3rd of October. I said gold has been in a wave 4 correction phase since early May here, following the completion of an upward surge, impulsive wave 3. The correction took the form of a zigzag pattern and can be subdivided as follows. So this is like a zigzag pattern. Can you see? So wave A is a larger trend. So let me not read all of this. But all I said is this is the first wave. Wave B was like a triangle, a contracting triangle. And then this breakout was a perfect entry signal, which internally, I would say we did not catch it. Of course, we realized late. We got in around here. So we still made some money, but not as we would on a good day. So when the market got here, we realized that the correction has ended and there is need for the market to start moving upward. And we have over 10,000 pips, to be caught on this move. I said it. So it appears that subwave C has wrapped up around this 1815, marking the completion of wave 4. Currently, I anticipate a significant upward movement in the form of a 5-wave impulse on the precious melter. So my medium-term target for this anticipated uptrend is 2093. That is my, medium term. Of course, the market has the, potential to, exceed this level. And then since then, I have just been updating you guys. The first one, when market came here, I said, now this move, one thing, if you have been trading for a long time and you are really committed, I mean, if you are committed, you've been learning, you've been studying, and then you've even taken some certifications, professional certifications, and you are also following fundamental data, you would agree with me that gold often rally whenever there is war. One beautiful thing that I will say about Elliott wave is that it works based on underlying dynamics of human psychology. And what you realize is that events align with Elliott wave if you do it properly. If you do not do it properly, then you often get your fingers burnt. So Elliott wave is a tool, just like a knife in the hand of a baker. He would use the knife properly. But a knife in the hand of a small child who doesn't know the use of it will hurt him. So that is the same thing with Elliott wave count. Most people who say Elliott wave doesn't work, they do not know how to use it. And that is why they get burnt. They get their money, their money got lost. They lose out on opportunities because they have not mastered the art of trading, art of using Elliott wave. So Elliott wave is a tool, and in your hand, if you are very good at it, you would make fortune. Okay, that is just by the way. What I want to say about Elliott wave is that because it hinges on underlying dynamics of human psychology, it has consistently demonstrated its capacity to align with various economic events throughout history. And that is just what happened here. When the market ended the correction, the market needed to go to the upside. What happened was that an event broke out on this very day when the market needed to start moving up. There was a series of accumulation here. The market makers were accumulating contract. And then, as at the time they wanted to start the move to the upside like a rocket, the war broke out. So historically, what you would understand historically is that it has been observed that during period of armed conflicts, the value of gold tends to experience an upward surge. It is a fundamental truth. This is a fact, sorry. It has been observed throughout history that whenever there is war, whenever there is armed conflict, the value of gold often rally. So this observation is in harmony with our current Elliott wave analysis of the gold market. And based on our previous analysis, we are currently up by 467 pips. That was as at this time. And I said, we anticipate a further rise in the price of the precious metal. So if you don't know your onions now, people who don't know their onions will close out here at 467 pips because they don't have the roadmap. But because we have the roadmap, this is the roadmap. Elliott wave. This is the roadmap. We know for sure that the market was going to go up. So what did I say? I said we anticipate a further rise on this very day. And what happened later, I still kept on updating you guys. I said gold is still delivering our outlook. From our entry price, we are currently up by 650 pips. An amateur trader or an inexperienced trader would have, been so excited by, the colossal amount of pips he has garnered in a short while, and he would be forced to close his position. But we did not, because we already have the roadmap. This is what Elliott wave does. I'm not saying that Elliott wave is the best analytic tool, but what I'm saying is that it's a tool. Once you know it, you have the market roadmap already. And When I go here, what happened? What did I say? The pair has proven to be our best pair. This pair, gold, because we made 650 pips in a short while. So it has proven to be our best pair. So how do we determine our best pair in PTN analytics? It is based on time and deliveries, what you have been able to deliver in a short time. So it's not that we've not had about 500 pips movement on a pair this year. We've had. I'm going to show you our record. But in a short space of time, gold has done it. So it has proven to be our best pair and the best trade of the year so far. So at the moment, we are risk free. So I said here, our position on gold has not changed. We have done over 730 pips from 467 when I updated you guys. So we have done over 730 pips. We still expect further rise. Are you getting it? Now, the roadmap is there. Look at it. I did the measurement so that anyone would see. I said here, so this is the measurement. This is 735. So what happened was that I came here and I said, congrats, we have now done over 1,000 pips on gold using Elliott wave. I read a lot of articles. Some people were saying that it's now about to reverse, going bearish. I knew because they don't have the roadmap. They are only trading intraday. They are intraday traders. We are traders as well as investors. We know where to pick an asset. We know when a correction is on and when correction is going to elapse. And we know the target that we should aim at for the full delivery of our outlook and forecast. Of course, we are not saying we are the best in this field, but currently, if you know this thing, your panic will reduce. A lot of people, caught a profitable trade, they cut it short midway because of fear or probably greed. Okay, because we have the roadmap, we know what the market has in store, and that is what we are going for. So this is the result on gold. You can see for yourself. Let me play it so that you can see what we have done so far. You can see this is it. You can see we started here. We only risk, I think, 75 pips or thereabout, and then look at, we have 1,000 pips, and this is where we are going. So once we get to half of the way, we can now start closing, taking partials. But right now we keep adding. We keep adding. We've been adding position. We're full margin on gold. Okay. All right, that is by the way. All right, let's look at other analysis that we've done. I couldn't upload the video, but I did send a JPEG format of the analysis on YouTube for those of you who are subscribers already. If you are not subscribing, please subscribe, and then so that you can get an update whenever we have new information to share with you. So what we have done is on USDCAD, the initial outlook we gave was invalidated after we've picked just two trades. We're going to go short, but we now recorrected that view, and currently we are expecting. I said that the wave 5 has completed, and we are expecting the correction in wave ABC, and this was going to be the ultimate target, 1.34887. And what have we had so far? We got the first move. Let's do that. We got the first move in A wave. Let's play it. When we got this first move, that exactly on our target, market reversed. And then when it got to that place, before it got there, let me just go ahead. 70. So I said, based on our analysis, my target, short medium target is 135.753, which was for A, this one. We got it. And our ultimate target is this one for the correction. So this outlook becomes invalidated once there is a break to the upside, and there was nothing of such, this break to the upside. So there was nothing of such. So when the markets got here, 75 pips, I updated you on trading view. Then I said we are still going down, right? So what happened was that the first target was hit at this point. So we got 126 pips profit. And then I said we are expecting a minor move to the upside in wave B before the eventual drop in wave C. And that was what we got. So I said after this, we expect the markets to come up. So what happened was that this outlook is playing out just as forecasted. Beg your pardon, there was an error here. So we are currently seeing the minor move to the upside. If the resistance zone holds, we might see a rejection. This resistance, that was before it happened, and a continuation to the downside. What happened was that there was that rejection, pumps, the market came here, and then we are having the downward move. So if anyone missed this first move and the second move, you can join in now because we have potential pips to the downside, a lot of pips to the downside, more than 200 pips to the downside. So as anticipated yesterday, price encountered resistance at the expected area, marking the completion of wave B. So presently we are observing a decline in wave C. Looking ahead, our outlook suggests that wave C is likely to descend to a minimum of 1.34887 price level, which is in line with our overall forecast, this forecast. Here, we are proposing that we are projecting the market is going to touch here. So if you miss this first trade and you miss the minor correction to the upside, which is about 79 pips, then you should not miss this last leg. Please and please, this is why we do analysis on YouTube. We want everyone to be profitable. Otherwise, we would have been, hoarding knowledge, or we would have asked you to join our Signal group compulsorily or our Discord. No, we want to share knowledge. If you feel you like our content, you can join us. But if you don't, you feel that you are okay with the free content, why not? We will keep on giving you free content. We will not hoard knowledge. Of course, we won't share our proprietary strategy and entry techniques for you because that would be unfair. But with what we share with you, you can still make money. That is just what I'm saying. Then the other analysis that is here is on GBPCAD. We are expecting a downward move to the downside in wave 5. We've seen wave 1, 2, correction in wave 2. And then we were fortunate to identify the commencement of wave 3. We got in here and we caught a lot of pips. Now, we saw a reversal, which is like a correction in wave 4. And we also now identify the completion, the end of that move, that correction. So we are expecting the market to drop to at least 1.62283. And what we have had so far, we've had over 70. Look at it. Look at what we've had so far. So this is just Elliott wave, pure Elliott wave. So we got a break of this trend line and we're expecting market to drop. So anyone who has also missed this trade, you can still jump in. There is no restriction. You have a lot of pips move to the downside. But we are currently, I think, about 90 pips in profit. This was the last time I updated. I said, since we got a trend line break, we are now 60 pips in profit. That was, as at the time, that's an hour ago. But right now, we are currently 90 pips, over 90 pips in profit already. But if you can still come in, you can join. It's not too late. It's not too late. The invalidation zone is here. So these are the analysis that we've done so far. Then the other one that we are also in is the EURGBP. This is a very clean setup. We have wave 1, wave 2, and wave 3. So wave 4 is presenting a triangle. This is a classic triangle. So we're expecting a break and retest. If not, just a break is enough. Then we can target this zone. Currently, we've been having sideways movement, but I think right now the market has moved in our favor. So right now, look at this is our invalidation zone. Market did not get there. It's tight. This should be about 4 RR. So now the market has broken the trend line. I think we can enter somewhere here. So if you have not entered, well, you can hold on. Let us see a clear break of this zone, then you can jump in. The invalidation zone is here, but once you see a break and then wave one completed, then we can adjust our invalidation level. That's our stop loss. So this is the outlook. We are bullish on EURGBP. We are bullish on gold. We are bearish on GBPCAD. We are also bearish on USDCAD. That's for the correction. All right, these are the analysis that we have done without you. Okay, we also did an intraday analysis on GBP USD. This was using Wyckoff. Like I said, on this platform, we use a combination of Elliott wave and Wyckoff. Sometimes we use Elliott wave, pure Elliott wave. Sometimes we use Wyckoff. Sometimes we use a combination of all. Sometimes we use only technical analysis. So here, I spotted a spring action, and I said the market was going to go up. So what happened was that there was a stop hunt, another spring, before the market started going up, and then we got that intraday move. So this was a very quick move, about 50 something pips or thereabout. No, this is about 70 pips. Is it 70? I didn't even put this in our record. I think this was done how many weeks ago? I think on the 5th, yeah, on the 5th of October, about a week ago. So we just took advantage of that. This was the last outlook we gave you, EURGBP. Of course, I know everyone caught this move. This move gave us a whooping 235 pips or 33 pips. Look at this move. So ever since then, of course, when the completion of wave C, you should know that there is an impulse in the opposite direction. So this, we didn't provide it. Of course, all our team are in this trade, and we are enjoying this move. I won't disclose that here, but for the ones that we made public, I'm going to show you the inventory of our market analysis, all right, so that you can see for yourself how we are fed. We started with a 10,000 account, and then we started on the 1st of September when we started the YouTube analytics. We started our trading view analysis long before that time, but we started the YouTube, and then we decided to take inventory of any analysis we do on YouTube, or the ones that we provide the moment we started YouTube videos. So if you are on YouTube, please follow us also on TradingView, so that if there's an analysis that is updated on YouTube and is not updated that is updated on TradingView but not on YouTube, you can also take advantage of those analyses. So we have done 15 total trades. 15 total trades. Please take note. So our first analysis was on GBP USD, and our target was 324 pips. I'm going to show you that trade. I'm going to show you that trade. We are not faking it, please. We are a transparent organization. This was the analysis. This was the analysis. And then we said we're going to get here. But of course, there was a follow-up mail, a follow-up message that we did on YouTube, that the market was going to still go down. Okay, so when we got this move, this was about, I think it's about 180 or so pips. Then in our markets review, we said there was still room to the downside. And this is it here. When we did the analysis, we have the markup for you guys. So we are not going to fake anything. We are not going to refer you to do this or that. But so you recall that I said we're going to make it up to this point. And then when this revamped, we didn't get it here, but when we got it here, we took it. So, but this first move, if you look at the move, this was exactly 322 pips. Can you see? All right. So that is what we have here. 322 pips move. On GBPCAD, we got 700 pips. That is it. Let me show you that analysis. We are not faking it here. Everything is clear on YouTube. You can check. We are not faking it. We are a transparent organization. This was the move. When we got here, I said we're still going to come here. The market would reverse when it gets here. You can check my analysis on YouTube. Of course, I said we're going to we were already in this trade before we started the YouTube. We started here. When we were here, I said it was going to come here. So, but behind the scene, look at it. This was the first 500 pips, and then the second 700 pips. Okay, movement. All right. So we got this move, and then here now we are now expecting the move to the downside. Of course, we are in that trade as well. So we got the 700 pips correct full margin. Then on GBP JPY, we got the 235 pips. 235 pips. Let me show you. 235 pips. You recall on this same platform, we said there was going to be a breakout up to this level, and that is it. So what happened was that we got a breakout, we closed here, then market did not fail to close above, so the market came back and we got it again, we took in. So overall we took more than that, but for the sake of this recording, this is what we got for those who followed us. All right, AUD USD. All right, so let's see AUD USD where we did the analysis. What we are doing is taking inventory. As a trader, you need to take inventory of your trades. It's very important. This is one way you can make it in this market. So we said there was going to be a break and retest. What happened? There was a retest here and we took this move. I told you that we had a first close. So, all right, on this we got 120 pips. We had our first close somewhere around here or so. We got our 120 pips. Then we closed partial. The market went up again. And then the drop, I said we need to see a break. So when we got a break, then we entered somewhere here. And then we took it here. So if you had everything together, this was the first one, this was the second one. So the first one, why was this a loss? Okay, we got a retest. This was the first one. I think we have given it to each one. Okay, this is going to be this is supposed to be 120. I beg your pardon. This was 120. Yeah, this was 120. Yes, because we got a break, we took this trade and we closed partial around this place. We let the markets went back, and then when it was coming down, we took it. So we didn't have any loss on AUD USD, not at all. So that's also. Now we've done this too. NZD, I think that was where we had a loss. Initially, we didn't have an opportunity to take the trade, but eventually we took it when we saw the break. Look at this. This was using classical analysis. So we're looking for this break, and when we took this, we were thinking it was going to hit our target, but the market went against us. That was when we took a loss on this trade. That was when we took a loss on this trade. This was a 50 pips negative. 50 pips negative. So the next one was GBP AUD that we also took. GBP AUD that we also took. That was also a banger. Like we really enjoyed the trade. We enjoyed the trade. Of course, you remember we were somewhere here. I said the market had the potential to come to this zone and reverse. So what happened was that the market did exactly what we said, touched our price objective, and then started going up. So overall on this trade, we've made a lot of pips. Like you see, currently we are 460. This is still running. This trade is still running, man. This trade is still running. My team didn't update this. So our target is 500 pips, after which we are going to close partial, but this trade is still running. We took this one, then we took this. So if you measure this move from here up to this level, we have 457 pips. So currently we are running at 450 pips. Our price objective is 450. Of course, we know that the market was still going to go up, but before the correction, we need to close partial and then keep waiting for the end of the correction, and then we load on again. So the next trade, we took this trade, don't forget we took this trade twice. The first one, the first analysis which was done on YouTube, that it will come here, you should be preparing to end it. So that was the first trade. Then the second one is the move to the upside. You can check our YouTube video, our forecast for that also. So this is the first and the second one. All right, USDCAD. The USDCAD trade that we also took. I do not intend that this video would be long. I would just rush the remaining analysis. Now, this trade, we posted it on YouTube also. We entered here when there's a break, and we took it here. This was our price objective, 115 pips. You can check. USDCAD initially. Okay, the USDCAD that we took initially was here. I beg your pardon. It was here. We said the market was going to come up and then reverse. So we took this one, which was 60 pips. And then we took the second one too. This is the USDCAD. The second one that we took, that it was going to come down, we took it, and then the market went against us. So when the market went against us, we allowed it to complete wave 5. On the completion of wave 5, then we knew that there was going to be a correction. So this was a revised outlook. So now, and I told you then, so this was why we had a loss here. Then the continuation is this, which I want to now talk about. After the completion of wave 5, we knew that there was going to be correction in wave ABC. So we proposed that, we projected that this market was going to give us the first 115 pips, which was this one, 116 pips, move downward. Then we also took the trade, we analyzed that the market was going to move, corrective move to the upside. Let me remove this. Corrective move to the upside from here to these points, which is about 100 pips also. This is it, 100 pips correction. And now we are currently in the third leg, which is the USDCAD move to the downside. So anyone who missed this first, second, can also come in here to the third leg. So that trade is also running. That trade is also running. Now USDCHF. USDCHF, like I said, the market, we expected that the market would do this and come down, but this took us out first, second, so we decided that this market has been, outlook has been invalidated, but we were not patient, so we missed out on this trade, even though we were right from the beginning. So we lost 50 pips on this trade. So, and I said on YouTube that this trade is actually, this outlook is invalidated. However, market has confirmed that analysis. Okay. All right. EURGBP. This was a trade that I showed you the other time. I really want to make this snappy. So I said the market was going to come down. I expected the market to close above the invalidation zone, and then there was no closure. So we got about 230. Look at the trade from here, 233 pips. What we had at 233 pips full. And now the USD, the gold trade, which is the biggest of all. The biggest of all, followed by the GBPCAD. So the biggest of all is the gold trade, which we are currently in. And like I said, we are still tracking that move. The move is still continuing. So guys, you see right now, even during the course of this analysis, market has done another extra pip move. Look at it. Look at it. 1,049 pips. As at that time, I think it was 1,030. So another 13 pips has been added in the course of this training. So if you had entered, you would have made another 13 pips. Of course, you don't enter that way. All right. So this is like an inventory of analysis, and then we took it out. So the profit we have generated so far in about a month, risking 1%, only trading 0.1. We only take 0.1 on our YouTube analytics inventory. 0.1. We've taken that trade to 3,000 3,528. So we've made 3,528 pips. You can see our graph. You can see we took $1,000. Now currently we have $13,528. So we have made over 35% in 1 month, just by risking 1% of our capital. So this is our sheet. If you are interested in this sheet, you can also ask me. This is an Excel spreadsheet. It is owned by PTN Analytics. This is what we use to track our trade. We have an extended one here. This is the last 30 trades. You can see how it keeps moving. So if you are interested in it, I can share with you. But if you can develop your own also, it's fine. All right, so that is all about this analysis. I hope you enjoyed it. If you are interested in joining our VIP Signal group, we have a Signal group where we share Signal. Sometimes we share entry. Most times we share entry, stop loss, take profit, 1, 2, 3 levels. And occasionally we share pictures, JPEG analysis of our videos. We also have a group where we have students who are trying to learn Elliott Wave Analytics or Market Maker method. We have that group where students learn. We also have a free group where you can just keep track of what we do. So if you are interested, please do well to send us a message in the comment section or reach out to us on Telegram. Subscribe to this channel. Share with any trader who is interested in making money, who is interested in the long-term perspective, long-term goal of achieving financial freedom. Let them join us. Any Elliottian, let them join us. Any Wyckovian, let them join us. Any technical analyst, let them join us. We also are available for professional corporate analysis. You can write to us. We are open. Thank you very much. Cheers and bye for now.